Hello again, and welcome back to the Ask the Doc Life Lessons podcast. Dr. V here. Today, we're diving into a topic that blends stability with growth, and that is dividend stocks with very low price earnings ratios, or PE ratios as it's known. If you're looking for smart ways to invest while managing risk, this episode is clearly for you. Let's begin by defining what are dividend stocks. Dividend stocks are shares of companies that regularly pay a portion of their earnings to shareholders. These payments, known as dividends, provide a consistent income stream while still allowing your investment to appreciate over time. Unlike growth stocks that reinvest earnings, dividend stocks reward investors with regular payouts, which is an excellent strategy for both retirees and long-term investors. I personally have two separate dividend portfolios that are both doing extremely well. So why dividend stocks are strong economic defense? Why do I call it a defense? In times of economic uncertainty, dividend stocks act as a financial cushion. Why, you ask? Because companies that pay consistent dividends tend to be well established and also financially stable. Even during downturns, these stocks can provide steady income, offsetting volatility and offering reassurance in your portfolio. Now, I've stated this is about low PE ratio dividend stocks. Why is that important? Okay, so price earnings ratio measures how much investors are willing to pay for a company's earnings. A low PE ratio often indicates that a stock is undervalued, meaning it has room for growth. When you combine a low PE ratio with a solid dividend yield, you get a powerful mix of value and income, a strategy many seasoned investors use to build wealth over time. Let's jump right into the 12 low PE dividend stocks that you should consider for your portfolio. Number 1, Verizon Communications, a telecom giant with a stable dividend and a consistent cash flow. They trade under VZ. Pfizer, PFE, a pharmaceutical leader with a strong history of constantly paying out dividends. Number 3, AT&T, a legacy telecom player offering a generous dividend yield, pretty high, like 6%. 3M under MMM, a diversified industrial company with reliable dividend payments. Number 5, Walgreens Boots Alliance, WBA, a healthcare retail giant with long-term value potential. Keep your eye on that one. It's pretty volatile, so be careful and watch it very closely. 6, Citigroup, trades under C, a major financial institution trading right now at a discount. 7, Chevron, a high dividend energy stock with long-term sustainability. 8, Intel, which I've been in for 30 years, a tech company with a surprisingly low PE and strong dividends. 9, Altria Group, trades under MO, a high-yield dividend stock with a history of payouts. It pays a hefty dividend. I'm into that also. 10, IBM, trading under IBM, a technology stock that balances dividends with innovation. Number 11, Lumen Technologies, LUMN, a telecom stock offering very deep value. And number 12, and finally, Kimberly-Clark, KMB, a consumer goods company with a defensive dividend play. While these stocks have solid fundamentals, it is crucial to conduct your own research before investing. As always, investing carries risk. This podcast is for educational purposes only and not financial advice. I strongly urge you to get some help with a professional financial advisor or stockbroker before making any investment decisions. All right, let's talk about some of the resources you could uncover. If you want to learn more about dividend investing in low PE stocks, check these out. The first one is my favorite, The Intelligent Investor book by Benjamin Graham. Clearly one of my favorites. I've read it 3 times over the last 10 years. Websites like Seeking Alpha, Morningstar, and even Yahoo Finance. Excellent places to get resources. Podcasts, of course, this podcast is one, but also the Dividend Guy podcast is also another one. So what this all means, what's the conclusion here? Dividend stocks with low PE ratios can offer both income and long-term growth potential, making them a great addition to any diversified portfolio. If you're looking for stability in uncertain markets, this strategy is worth exploring. Okay, that's it for today's episode of Ask the Doc. Be sure to subscribe and leave a review and tell me what else you'd like me to talk about in upcoming podcasts. Until next time, this is Dr. V signing off.